Good evening, guys. My name is Henry Gamble, and this is the free video for Simpler Options. Coming in this afternoon, taking a look at Goldman Sachs prior to earnings. So today we're doing this video. It's Monday, July 14th. Goldman Sachs will report earnings on Tuesday, July 15th, but they report prior to the market open. A nice feature of Thinkorswim is you can hover over this icon provided you have it enabled, and it's going to give you the date and then whether or not it's going to be before or after they open. So, of course, anytime a company reports prior to the open, you've got to make sure you establish your position prior to the previous day's close. That way you've got your exposure when the announcement is made. The whole idea, or one of the primary reasons that you want to consider an earnings trade, is to find situations where you've got elevated implied volatility and to be able to sell that implied volatility. If you don't want to get into these spreads or you don't want to trade earnings, that's fine, but the last thing you ever want to do, at least as a general rule, is come in and buy a directional call or put option around earnings. That's not the way you want to play implied volatility. And some of the thoughts that I put into these: first, you start off, and I like to look at what has the company done previously. So I'm not going to go through each of these, but if you hover over this icon, you can see it towards the top. Of course, it only shows up when you're actually hovering over it, but you're going to see earnings were $3.43 estimated. They came out with $4.02. You just go back previously and see how has the company been doing, because I think that helps you get a feel for what could come, of course. Now, the next thing I like to look at is technically. We look at the weekly squeeze, and we can see that this signal is still bullish. So anytime you've got something like that, of course, earnings can absolutely trump a technical signal. But I think it makes a lot of sense to at least give those some credibility. So we've got the weekly squeeze that's bullish. We know that XLF, the big financial ETF, also follows a lot of similar signals. We also know that Citigroup came out this morning and did very well. So all of these different things are what sets me up to have a general bullish expectation on these earnings. Then, if you come in, you'll notice that I have this zone highlighted from about 170.45 into 171.08. These are previous technical highs and don't do anything for me technically other than that they are just old highs. So I look at that and say, well, maybe that's where we're going to have a little bit of resistance. Now, where things get interesting is when you bring over your option chain and you're looking at open interest here. Notice the large amount of open interest that you've got in the 170 calls. I always refer to this as synthetic support and resistance. In the case of the call options, this is going to act as synthetic resistance because the amount of open interest that stands out here assumes that the majority of retail traders are buying call options. It also assumes that they're not taking into account the expected move into the end of the week, because the idea would be that even if Goldman Sachs does move higher, that it still stays below the 170 strike. So what type of strategy can you employ here to try to take advantage of, a bullish opinion, but still thinking it's going to stay below 170? That's where I like looking at these butterflies. Now, in the chat room this afternoon, we looked at several different ways you could put this on, but we ended up going with the $5 wide butterfly centered around that 170 strike. They're looking for this to expire worthless. I typically like to work these spreads and consider that I don't want to pay more than 1/3 the width of them. That makes sure that you've still got some room to try and work a profit target while not paying too much for that debit. So we know if we've got a $5 wide spread and we don't want to pay more than 1/3 for it, that drops us down to about a $1.67 debit. So when we're looking at these $5 wide spreads, you can see I placed two separate orders and essentially wound up with a debit right there in that range. Then when this opens tomorrow, what I'm looking for is that the 170 call options drop. Ideally, the closer they can get to zero, the more advantageous that will be for me in the spread. I'd like to see that we're trading somewhere around 169.50. That would give me the benefit of the delta, the directional move in the 165 calls. We stay below the 170s, collect the implied volatility drop there, and those are the types of spreads I like to work in those situations. Now, another thing that was asked is why wouldn't I do something like a put credit spread here? Well, I just went over the kind of detail of the butterfly and how the risk reward is calculated. To me, I would much rather risk that $1.65 with the potential of making somewhere around $3 than looking at the $5 wide vertical, because when you drop this down and you can see, okay, 165 by 160 is going for $1 if you could get it. So let's say you got the $1. Well, then you've got $4 worth of risk with the potential of making $1, and that just isn't quite as attractive. With earnings plays, I always approach them as a binary setup, meaning it could be either max loss or max profit, and there's not a lot in between. So if you really take that into account prior to placing the trade, I think you'll lean a little bit more towards these butterfly plays than straight up verticals. and hopefully that helps you with your next earnings assessment. Now, one other thing that I wanted to make you guys aware of that's going on this Wednesday and Thursday, it's going to be the 16th and 17th of July, is that we are having an open house. So for those of you that are kind of familiar with what we do, John, Bruce, Carolyn, and myself all spend the typical trading day in the chat room, kind of discussing what we're looking at, following through with the execution, actually sending out real-time orders, and that's what we focus on. So if you've heard of it, or if you'd like to check it out and you've never got to see it before, this is a good opportunity. So we're going to have the open house on this Wednesday and Thursday. It's completely free, no obligations whatsoever, so you can hop in there for free, kind of see what we're doing, and I hope to see you guys there.